We're seeing recently a big run up when it comes to the NASDAQ. We're also seeing a couple-day winning streaks when it comes to the NASDAQ and the S&P. How do you feel about this rally? Is this a rally you think sustainable?
Well, this has really been going on since sort of mid-March. I think the past, we had a really nice 2 weeks of consolidation. So I think having a rally for the past couple days does feel sustainable. However, I will caveat that we are getting a little expensive when it comes to valuations. And when the outlook is a bit iffy, to say the least, for the remainder of the year when it comes to profit expectations, operating margins, I don't want to get too expensive. So as I don't believe that we need to get out of the S&P 500 completely, I think we just want to be a little pickier or a little more selective about which stocks we include.
Okay, so Bank of America says get out at 4,200. We're at 4,200 right now, basically. So agree or disagree with that thesis, or you're saying there's a later point you get out?
So I think if you're in the S&P 500, yeah, we are basically at 19 times forward earnings, 4,200, same thing. I don't think it means that you necessarily have to have a crash, but I think it's fair valuation. So I would say more. I don't think you need to add more to the S&P 500. I think you need to be more selective about which stocks that can still have a little more value and a little more upside and run.
Okay. Tiffany, how are you feeling about this recent run-up, especially when it comes to the NASDAQ and tech? Are you a believer in that? We're just talking about some people, B of A, one of them, believe this may all just be a bubble that could burst off this hype over AI.
Well, that's a lot, Frank. So listen, I'm thinking about, like earlier you were talking about the debt ceiling. That's always a concern. And really what we're talking about is volatility, right? And so my clients are institutions. So we're really in this for the long game. And we're really thinking about portfolio protection. And when we're talking about that, I think I would be remiss if I didn't mention the fact, if we didn't highlight the fact that the 5-year Treasury is at 3.68. The 10-year is at 3.65. And so it's not exciting, but from a portfolio protection standpoint, I like it, and I'll take that all day long in a volatile market.
All right,
but on the equity side,
wait, Tiffany, you're leading me to some really interesting stuff here. I love this that you're talking portfolio protection. Yeah. You obviously watch Worldwide Exchange. It's a big theme here. So let's go through your thesis when it comes to portfolio protection. What are you advising your clients to do?
Well, first, we're definitely investing in bonds and treasuries. But on the equity side, investors should really consider having a set formula for selecting stocks. So for us, the formula is growth, quality, and income, right? And so first, don't abandon growth in volatile times because you may find some really great deals. Second, strong companies tend to weather storms better. And the third, in terms of income, the third is income. Look for companies with strong track records of paying dividends. Also, look for companies that are increasing their dividend, right? Because that's an indication that they have a very positive outlook for the future. No company wants to be the company that increases their dividend and only to cut it relatively sooner after. So that's kind of like the formula. And so one other thing that I think investors should consider not doing is don't try to index your way through the volatility, because there's some asset classes or some areas where an active strategy is really more effective.
I like that. You gave us a don't as well. Erin, we got to get going, but I know you have some picks for us. What's your number one pick that you would advise your clients to put money into today?
So I would say just two. I would say Chipotle and Starbucks are two of my top picks. Really strong free cash flows, and that's sort of our thesis is strong cash flow and quality, and that's again selective. Don't just buy in the index.